Hello traders, Gary Wagner here. It is 12:55 in Honolulu, 6:55 in New York on Thursday, 26th day of May, 2022, and this is the daily report for gold and silver. Traders, if you recall from yesterday's show, it began by reporting that we were stopped out of our June trade. We got in at 1831, out at 1850. Gold is trading higher today. We're looking at the June contract up $2.20 at 1848.50. In addition to pulling profits yesterday, we re-entered a long gold position. However, we chose the upcoming most active contract, which is August 2022. We entered that trade at 1849. August futures are up $1.90 at 1854.40. Now, a lot of the recent activity that we have seen in gold has been a direct result of a key pivot that occurred in the dollar. On the lower left-hand side of the screen, you can see a strong move to the upside, breaking 105 on an intraday basis, and then forming that perfect V formation and coming down. Traders, unquestionably, one of the most important reports will be released tomorrow, and that is the current PCE, personal consumption expenditures, the preferred inflationary index used by the Federal Reserve, and will be instrumental in determining forward guidance of their monetary policy at both the June and July FOMC meetings. What I really want to focus upon when we look at this chart is a double top that occurred prior to this current rally in gold, which is now indicating the real potential for a triple top. While both of the previous tops resulted in heavy devaluation of the dollar, 16% here, 15% here, more realistically, we can look at the short-term levels of potential support. The first one coming in at 100.85. That is based upon the 78% retracement. And what I believe to be a very important level that comes in at 96.30 based on the 61.8% Fibonacci retracement. If in fact we see a continuation of selling pressure in the dollar, it would certainly be highly supportive of gold prices. Which brings us to our current analysis of gold. We're looking at a daily bar chart of August futures. We do have our three primary moving averages. In green is the short-term 50-day moving average, which corresponds very closely to the 38.2 Fibonacci retracement. The data set we use is from these highs at 2086 to these lows that came in at 1792. If we see a continuation of gold moving to higher prices, I believe that we might encounter minor resistance at 1862. However, I do believe a realistic expectation for our exit strategy on our current trade is to exit our trade between 1893, the 100-day moving average, and 1905, which is both the 50-day moving average as well as the 38.2% Fibonacci retracement level. Maintain your current long position as well as your stop. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Friday for the weekly wrap-up and review. Bye-bye.